147% returns in 1 year. Yes, this is the highest 1 year return by any fund category. And it is not small cap or mid cap. It is Nifty Microcap 250 Index Fund. Yes, between 2020 and 2021, it had given the highest ever returns by any fund category, even beating small cap. And they are the top performers of this last decade from 2016 to 2025. Very interesting. Did you know this? Personally, I didn't know this until I saw this ET Wealth magazine. Yes, and this is a very interesting category. So today, I'll be covering this category. What does this category mean? What are those stocks which comprise this category? What are the kind of returns microcap funds have given compared to large, mid, and small cap? Why have they given such high returns? What makes them top performers? And also, if you were to compare them with large, mid, and small cap companies, what is their survival rate? What is the probability that they will do well compared to these? And not just stocks, but also funds compared to all the other three conventional categories, how they fit into this whole scheme of funds. And should you invest? And if you should invest, what kind of investor you should be? All this I'm going to cover in today's video. So stay till the end. Hello, I am Franky Fernandes, a certified financial planner. And my goal is to help young families because I'm also a marriage coach, a relationship coach. And my goal is to help young families grow their wealth, but not at the expense of their relationship. But I want them to have a great marriage, a great relationship, so that you will have peace in your home. And also, when you retire, you will have wealth and a great relationship. I have launched Harmony and Money, a community to address this same challenge to help young families grow their bond, but also grow their wealth. So I teach, I help them to grow their financial literacy, rewire their brain to make the right investments, and also to learn how to build their relationship with each other. So join my free webinar where I talk about my community. And I also, in this 90 minutes webinar, I also teach some very, very crucial truths about money and marriage. So I hope to see you on one of the Sundays at 7 p.m. Without much further delay, let us get into today's interesting video. So let's first take a look at the last 10 years, the whole decade. Compare micro caps with small caps, large caps, and mid caps, and see what is the kind of returns they've given each year. Let's take a look at the screen. So this is the winner of the decade. If you see here let's take a look at each year. Mid cap is in 2016. Mid cap was at the top with 5.5%, large cap 4.2, micro cap 1.6, and 0.5 small cap. So we are only looking at micro cap. Now this year, micro cap gave just 1.6%. And 2017, it was the winner. And way ahead of small cap, mid cap, or large cap. 71%, that is 0.9%, 72%. These were the terrible years for microcap. 2018 and 19, just before the COVID. Minus 27.9 and then further minus 24. That means it went down by around 30%. And from that 30%, again, it went down 25%. Then from 2020 to 2024, there was like a sort of a bull run for microcaps. 36%, 75%, 8%, almost 65 and 33. So these were the best years for, but then again, in 2025, it is right now minus 7%. So overall, in the last 10 years, it has given 23.3%, way ahead of mid caps, small caps, and large caps. So in the decade, in this last 10 years, micro cap has given 23%, mid cap 19%, small cap 16, and large cap 13%. So the first question is this a great category? Should we invest? Will this continue for microcaps? Now, to answer all these questions, we need to take a deeper look. We need to dive deep into this category. And that's what I will do today, right now. And let's get into this. So, let's first understand this category better. And then you will know what action to take. So, how do we categorize these funds? So, here, if you look at it, what comprises of large cap? So, large cap funds they're the top 100 companies. Mid caps are 101 to 250. Small caps are 251 company onwards. And micro caps are below small cap universe, typically beyond the 500th company. That means they are much smaller in size, small companies, much smaller compared to the large caps. So you can imagine the kind of companies these could be. Let's take a look at the returns that they have given. So these are some of the top micro funds, micro cap funds, and let's take a look at the returns. So here are the returns. So in the last 3 years, Bandhan Infrastructure Fund has given 32.40 3-year CAGR, compounded annualized returns. HDFC Infrastructure has given 35, 25, and 22. The lowest is around 20 percentage. So what does that translate into? So if you had invested 1 lakh, what would this be? On an average, what you would have received through these funds. So the lowest fund here would have given you 1.7 lakhs. That means 1 lakh invested would have become 1.7, and the highest would have given you 2.5 lakh. And here, when it comes to 5-year CAGR, see the maximum is 43%, and the lowest is 37.42. If you had invested a lakh in 5 years, the minimum you would have got is 5 lakhs, and the maximum is 6 lakhs. So this is a kind of returns that these funds have given in the last 5 years, in the last 5 and last 3 years. So if you look at some of the NAVs of the Nifty 50, that is the index, from 2016 to 2025, that is middle of this year. So if this NAV is 350, if you see here, it is 350. The microcap funds have given close to 550. 200 extra NAV, that is the value. Let's compare them to the large cap, mid cap, and small cap. So if you see here, this is the large cap. So the large cap, the average 5-year CAGR is 17.1. Mid cap, the average CAGR is 30%. Small cap, the average CAGR is 37%. This is almost 40%. Micro cap. See the difference. 5-year CAGR. So if you had invested a lakh in each of these categories 5 years ago, what would you have received today? Let's take a look. You would have 1 lakh would have given you around 2.2 lakhs in 5 years in a large cap, which is good. These are the top large cap funds. Mid cap would have given you 3.7 lakhs. Small cap would have given you 4.8 lakhs, but micro cap would have given you 5.37. 1 lakh, 5 times, more than 5 times. Small cap is almost 5 times. Mid cap is 3.5 times. Large cap is more than 2 times. These are the top funds, and I've taken the average. Just see the difference. Just see the kind of returns micro caps have given. So now the question you may have is, how come micro cap funds are able to deliver such high returns? What is the secret sauce? Let's take a look. So they're able to deliver such high returns because of these two main things. Information asymmetry advantage, which means there is very less information about these companies in which microcap invests. That means there's a limited analyst coverage. So lots of hidden opportunities, which means not many know. So, so here, as you see, manager skill is premium because fund managers who can uncover, who can research hard for these companies because they're hidden opportunities. The more information more people have, the the less advantage you have. For example, in large cap companies, the information is available to most of the people, including you and me. and even the panwala probably, because these companies, everything is available in the market, on the net. uh, if you Google or maybe ChatGPT, and you will often find it in the news. They are very highly liquid stocks, large cap companies. So the more information you have, the less is the probability for making high returns, because everyone knows it. So you can't take an advantage. For example, if you knew about a stock as much as I know, so we will go and buy that company at that price. But what if you knew something about a company and I didn't know? I don't have that advantage. You have that advantage. You know if this company will do well 2, 3, 5, 10 years later, because you have the information. So if you see here, the very limited analyst coverage. Small caps have few analysts. Micro caps have little to no coverage. That means a lot of these stocks, maybe thousands of these stocks, there is not much coverage, not many know. So the one who finds the hidden gems is the winner. And that is what is the challenge. On one hand, to find out micro cap stocks, that is the challenge. But but the returns that you get is very high, because they they go up, they move up as soon as the news comes. And the manager skill is premium. A mid cap funds, high stock selection skill. Small caps, very high critical stock picking skills you need. But in micro cap funds, you need extremely high research intensive approach. So it's a very, very research intensive. It is not just technical analysis. According to my understanding, there's a lot of fundamental analysis, understanding of the companies. And that's why micro cap funds are able to deliver high returns. So, what does this tell us? It tells us that success in microcaps depends heavily on fund manager expertise. That means you need a good fund manager who consistently works to find these jewels, these stocks, right? Skilled managers can navigate. Now, remember that these companies are not very liquid like large caps. Not everybody is buying and selling these funds. So illiquid markets and spot quality undervalued stocks. That means a stock probably is trading at 50, but the fund manager sees this as becoming 500 or 5,000 even. So it all depends on the skill of the fund manager. Consistently, a fund manager has to keep uncovering, discovering these stocks. So it is important for us to know where these fund managers invest. These microcap funds, where are they investing? What are these companies? So let's take a look at some of the stocks in the microcap category, which have really gone up and also which have come down. Both are very interesting numbers. So here, if you see the examples of top performers, 5 to 10% yearly annualized returns, that is compounded returns, more than 35%. Shakti Pumps, 44%. Lloyd's Enterprises, 36. Vari Renewables, 79. 52, 62, 42, 35, 53, 40. Amazing returns. Amazing returns, compounded returns. Now, just a quick disclaimer here. These are not stocks that I'm recommending. These are the funds, these are the stocks that some of these funds have bought. So I am not recommending. For all you know, these have given great returns. They may even fall. So be careful. I'm not recommending these. Please do not. The best thing is to buy a fund, because the fund manager has a lot of information. Let's take a look at the bottom performers. J Corp down 67% from 327 to 109. Orchid Pharma from 1800 to 758. Jindal Worldwide 79 to 36. Kesaram 81.99%. That means stock down. That is 33 to 6. And Valiant Organics from 1382 to 357. What a drop. Now, this is the kind of performance, or this is the kind of volatility that these microcap stocks offer. And that's why you need a very, very skilled fund manager. We all can probably try in large cap and maybe mid cap, but small caps and micro caps, as individual investors, it is almost impossible to find out these multi baggers. So don't attempt, and if you're attempting, it's at your own risk. So as I was researching these microcap stocks and the microcap funds, I was eager to know, uh, what about these these microcap stocks, in the whole universe of microcap stocks, how many have done great and how many have done bad as a percentage? And this is a very interesting number because this will tell you how risky it is. For example, if you were to invest in a large cap, most of the large caps have done well in the last 5, 10 years. Very few of them probably have not done well because they're big companies, established companies. At least they would give 10% compounded returns, 5 to 10% compounded or 15%. These micro cap companies are giving 60, 70, 80% returns compounded, but not all. So now I'll show you the universe of these funds, large cap, mid cap, small caps, and micro caps, and what is the percentage of micro cap stocks which do well and they don't do well. Let's take a look. I want you to pay attention to this chart. Very important, right? So, what are the risk factors in investing micro cap? For example, if you were to invest in a micro cap company on your own, directly investing, what are the risks really? And these are the risks which also the fund managers have. For example, the liquidity risk, which means once you buy, can you sell them easily? For example, a large cap, the risk is very low, or probably negligible. Any large cap stock, for example, HDFC Bank or Reliance or Tata Power, Tata Motor, you buy and you can sell them anytime you want because there will be buyers every day, every minute, every hour. But that is not the case with other micro cap. It is moderate, small cap very high risk, but micro cap very high risk, which means when the fund manager wants to sell a stock, he will not easily get buyers, which means if the stock prices are falling, right, and you want to sell it, you may not get the price. If it is at 100, and if you want to sell it, there'll be very few buyers at 100, but there could be buyers at 50, there could be buyers at 30. So very illiquid and very high. That means if the fund has this stock, it's very high risk. If investors want to withdraw from these funds, there's a big challenge. They may not get that NAV could be here, but when by the time you withdraw, the NAV could have come down because they are not available in the market. Volatility. This is very, very important. Drawdowns. Drawdowns mean how much the the stocks can go down, what percentage. So, for example, recently in the last 1 year, in 2024 October, when the markets fell, October, November until March, so there was a drawdown. They fell by large caps, mid caps, small. They all fell by 15, 20, 25%. That is a drawdown. Now here see a drawdown of these stocks, of these basically as an index, 15 to 25%, 15 to 25%. But you see it goes up 20 to 35. That means 100 can become 85 up to 75, but here 100 can go up to 65, and here 100 can go down to minus, that is 55, but here 100 can become 40. Such high, that means they can go down. That means you can see 1 lakh if you invested can become 40,000. That is a drawdown at one point. It can happen. Now the businesses, right? So the businesses survival, out of 100%, there's a 95% probability that large caps will survive, and this keeps going down. 85%, 75%, 65%. That means 35% of the companies will not survive. And if a fund manager has invested in these stocks, or you as an individual, you may get zero. That means the stock may not exist. Information access. Excellent. That means everybody has information. This is good. Limited. 43% of the stocks, the universe of stocks, have no coverage. No one knows. No one knows, probably except for the promoters and probably the friends or investors. No one knows. That means there is no information. That means if you have the information and if you know if this company is going to do well, that means if you have the information and if this company is going to do well, you'll make a lot of money. But here only, that means only 60% has coverage. Fraud risk, right? Companies, there's hardly any, because it's high governance, big companies, high credibility. But you see here, fraud risk is very high. That means high probability of frauds and stock prices crashing. Fund success rate. These are the funds, right? 26% do well, 72% do well in mid cap. I think this is a great category that most of your funds will do well. Here it is 44%. It is decent. 35% probably beat the benchmark. They will do well. So this is the snapshot of microcap companies compared with the other caps. So investing in this is not a child's play. When you invest in this, you only don't see only returns. You may see, most of the cases you may see losses. Same thing that was in text. So here we see a chart. So here you see uh, stock performance by market cap. What is the performance, right? Strong performance, blue, 15% plus. Strong performance, if you see here. If you see microcap, very few have, the percentage is low. In fact, microcap companies performance strong, 15% plus microcap. And that's the reason, this is one of the reasons why mid caps are my favorite category. Here, if you see here, more companies give better returns, then large cap, then small cap. Very around 50% companies, only 50% companies give more than 15%. 8 to 15%. You have a lot of companies here. Few here, more here, more here. But under 8%, huge percentage here. Mid cap and large cap are almost the same. So that was about companies. What is the survivorship, percentage of companies? But what about funds? When fund managers invest in these companies, how have those funds performed? The large caps, mid cap, small cap, and micro cap. Let's take a look. So here, the survivorship rate of the funds, 95%, 90% plus, 75%. So only 65% funds, the survivorship rate. That means they will do well, or they will survive. Average 10-year compounded returns is 13.2, 18.8, 18, and 16.2. This is the 10-year CAGR, which seems low compared to mid cap and small cap. This is the average because not all funds will do well. Some of the top funds may give you 40, 50% CAGR, but there are other funds which may give you very less because it is depends on the skill of the fund manager, which means you can't just pick any fund randomly. You have to really, really know which fund to pick up. Now, the strong percentage of strong performance which give more than 15% CAGR. So here it is average 60, here only 45%. Very few funds will give you strong performance and active fund outperformance compared to the benchmark. So most of the mid caps actually outperform their benchmark. Then you've got large cap. Here it is moderate, but this is not even tracked. So you don't know if the fund that you've purchased will do well. So what are the key insights here? Highly consistent but tough for active managers to generate alpha. That means they cannot, alpha is above the benchmark. Above the benchmark, very hard because everything is known. Best risk adjusted returns. High multi-bagger potential but very volatile because of the drawdowns. But here, extreme polarization, huge upside. 574% post-COVID, but highest risk of failure and delisting. So I'm sure this has given you an idea what kind of funds these are. Although they have given great returns in the last 10 years, don't think that they'll give you great returns in the next 10 years. We don't know. Very risky. They give you high returns, but at the same time, they drop also to the low. So how do they perform in various markets? Bull phase, bear phase, or sideways? In bull phase, very high returns, rapid growth, outsized gains possible. So in the bull run, um, they quickly go up. So not the best time to buy. Probably the best time to buy is bear market when high volatility, steep declines, 50, 60% drawdown. Right time to invest, but has liquidity constraints. Sideways, mixed results, stock specific performance, but high volatility. Now we come to the last segment, which is, should you invest? Can all types of investors invest? I'm sure you have already understood what kind of stocks are these, what kind of funds are these. So should you invest? It depends on who you are. It simply depends on your risk profile. Now, buying large caps, mid caps, you don't really need to know, very precisely what is your risk profile, because especially for large caps or hybrid funds or other hybrid funds or debt funds, you don't need to really know your risk profile, because even if you have very low risk profile, you can still buy because they are stable funds. But to invest in especially small caps and micro cap funds, you must know your risk profile. If you don't know your risk profile, you just out of emotions, just because they've done great in the last 10 years, you start investing a big sum, you could be in trouble. So beware. Three times I'm telling you, beware before you invest in this fund. And I'll show you what kind of investors can invest in this fund and what kind of investors should stay away from this. Let's see. So, should you be investing? Let's take a look. So, what type of an investor should you be, and how long can you stay invested? High risk tolerant investors only should invest. Who are high risk tolerant and why? Microcap funds are extremely volatile, which means they can go up, they can go down within a span of a day, weeks, months, with the potential for sharp swings both up and down, right? And only investors who are comfortable seeing losses of 40 to 60% or more in bad years should consider these funds, which means first you should find out what is your risk tolerance. So there are three categories. There are three levels: conservative, moderate, and aggressive. So you should not invest if you are conservative or moderate. Only if you are aggressive, which means you can take huge losses and nothing will affect you. You won't feel scared, worried, anxious, then only you should. Please check your risk tolerance level. Don't think that you can take high risk. When the markets are up, everybody's can take high risk. Everybody's excited. The real test is when the markets fall. A lot of young families who invested in very high risk funds, when the market fell, they came to me asking, "What do I do? What do I do?" That tells that tells that you have very low risk profile, which means you can't take high risk. It is like you can't eat very spicy food. You enjoy spice, but you can't eat very spicy food. If you eat very spicy food, your tongue burns, and you must eat sweet because otherwise it'll hurt you, your tongue, your stomach, and everything. Same thing in investing. And if you want to know more about the risk profile and the risk tolerance, risk capacity, risk appetite, watch my video where I've clearly explained. The title of the video is Announcing the Right Mutual Fund Not for You. Go through that. I've shared in detail. So you cannot invest if you're not a high risk tolerant. Only long term investors, which means long term, 10, 15 years. See, microcap investments can take a long time to deliver meaningful returns due to frequent drawdowns in market cycles. Now, in the last 10 years, there are quite a few years when it is high, but in the next few years, it may not be the same. For 4 or 5 years, it may be down. And if your 1 lakh becomes 40,000 and it remains 40,000 for 1 or 2 years, will you be comfortable? If you're not comfortable, you cannot. You should be a long term investor. First, you should be a high risk tolerant. Second, you should be a long term investor. Investors should have a minimum of 10 to 15-year investment horizon. Shorter durations may result in severe losses. Number three, you should be wealthy. You should have a lot of money. Your risk capacity should be very high. Those with significant liquid net worth for whom microcap represents small 5 to 10%. Just imagine you have 50 crores. You're wealthy. 5 10% of your diversified portfolio, and within your 50 crores, probably you have got 30 crores assigned to equities and the other 20 crores probably to real estate. Out of 30 crores, what is 10%? 3 crores or 1.5 crore, 5%. So only that much you can invest. And ideally, those who also invest in other market segments and have robust financial backstops, which means you are invested, you're spread, large cap, mid caps, flexi caps, small caps, and all that. Only then, if you're wealthy, you can invest. Experienced, research oriented investors. Again, if you are a person who does your own research, finds out about companies, then probably it could suit you because you know you can trust micro cap fund managers, individuals able to do in-depth company analysis, understand market cycles, spot red flags, and make independent investment decisions. You make some independent decisions. Probably you buy your own stocks, and a lot of your money is into micro cap funds, but you also are one of those who researches stocks. You're comfortable with limited information available, right? 43% of micro caps have no analyst coverage. So probably you are one of those emotionally disciplined investors. Emotionally disciplined. Patience and the ability to withstand long periods of underperformance or market neglect without panic selling. That means you should be emotionally very strong. I don't know if you invested. Did you invest in during the COVID? Were you invested during COVID? If during COVID, when the markets fell, you panicked and you sold some of your mutual funds or stocks, then microcap funds are not for you. But during COVID, you were calm. And in fact, if you invested more, then you are emotionally disciplined because you can take high risk. Personally, I invested during COVID. But to be honest, I have not invested even in one microcap fund. But after this analysis, personally, I think I should at least in my early 50s, because I am a high risk tolerant person, at least 5% I can invest. Now, the next question is, these are the investors who should invest. Should we also look at what kind of investors should not? So, who should avoid microcap funds? Conservative and moderate investors, I just mentioned. So, if you are conservative or moderate, that means out of those three levels that I talked about, if you're conservative, which means you're risk averse, you don't like too much risk, moderate, you like okay risk, you should avoid. Microcap funds are not for you. They're not for you. So, first and foremost, please check your risk profile. I have given it in that video how to find out. Right? They should avoid microcaps. Risks are too high for capital preservation or short-term goals. Second is retirees and near retirees. Need liquidity and stability. Microcaps are too volatile and illiquid. For example, if you are in your 60s and you're retiring um, and you need stability, liquidity, this is not for you. First time or inexperienced investors. If you have not invested in mutual funds, you're very new, stay away. Regular income seeker. That means you're seeking income. Microcaps don't provide steady dividends. Gains depend on long-term capital growth. So these funds don't give dividend. Quick liquidity needs. Hard to exit microcaps during downturns. Prices may fall sharply in sell-offs. That means if you have quick liquidity needs coming up, stay away from microcap funds. So what do you think? Should you invest in microcaps? If you have followed this, this whole research, this understanding on microcap, you have got an idea. They are great. They sound very exciting. 10 years, 23%. But they can be very, very tough on you. So the returns are mouth watering, right? They're like those good looking, probably good looking kebabs, extremely good, but they are like those spicy kebabs. They look very good, smell very good, but when you start eating, you cannot tolerate. And they're exactly like this. They look very good. You may want to have a lot of your funds in that, but beware, you may burn your fingers. So it's a good category, nice to have a small portion of microcaps, but be careful. Only if you have passed those filters which I just shared, only then invest. Otherwise, you can be in danger. Nevertheless, a nice category where you can grow your wealth. If you are a young couple in your 30s, probably if your risk profile is aggressive, this is the best time. For the next 15, 20, 30 years, probably you can stay invested. But but the biggest drawback I see is that there is very less knowledge. So you need really good fund managers. And fund managers should stay consistent. That means if you have a good fund manager and he leaves that fund and someone else comes who may not be a good fund manager, you may not get that much returns. So a good fund manager, consistent fund manager is very important. So keep a watch on who is the fund manager, what is his performance history, and keep a track. If the fund manager changes, keep a watch on the fund and see if it is again giving the same returns or come out. Just choose your fund manager very carefully. Choose your fund house very carefully for this fund because there can be frauds in the companies. So a risk management, a fund house which has a very good risk management in place is the right fund house for you. A fund manager who's very shrewd and sharp and who focuses only on small caps and micro caps, that is the fund manager you should go to. Well, I don't I don't recommend you which fund or which fund house. Please do your own research, talk to your financial advisor, and make that call. So what do you think of this video? Let me know in the comments. Give me a thumbs up or a thumbs down. Let me know more. Let me know what else I could have done. And I know some of you have also mentioned which are the other fund types. And I am going to do more research on other fund types also. So until then, find out which is the best fund for you. And if you have not subscribed, please subscribe to this channel so that you will learn and you will increase your financial literacy, especially on mutual funds. So I'll see you soon. Bye for now.